What is going on, guys? Chris here, and welcome back to another video. It's been a long time since I posted on YouTube, but I did want to do sort of a daily recap of how I would have traded today. I made a few trades. I went 3 for 4. I'll go over those trades, which I didn't alert, but I took them by myself. And I want to just kind of generally give you guys an idea of how you should have traded today. And I'm going to explain every single bounce and why it's happening, because the market basically just moved today on fair value gaps and a few order blocks, and it just hit buy side, sell side, buy side, sell side. So we're going to be using the replay feature for this video. So I'm just going to start here at market open, and we're just going to go through exactly how you should take a trading day. If you have a full trading day, this is how you should be trading it. First thing I would be doing is marking out the CPI high up here. So we'll just do CPI buy side. And when we start in the morning here, we can see we take out these relative equal highs. So this is something very important to notice. And again, I'm going to try to estimate a few of these values just because we don't have a ton of time. But those are your relative equal highs right there. We take those out. So know that we've taken out buy side liquidity, and we can see since yesterday on CPI, we of course tanked in the morning, then we had a sharp increase, and then we downtrended into the end of the day, and then overnight we had a very nice uptrend. But in this portion, right before market opens, we are actually downtrending. You're gonna say, "Oh, Chris, we're consolidating," but we are downtrending from these equal highs up here. So right now, the ideal trade for the algorithm is to take out those equal highs. So that's exactly what we do, and then we sharply decline into this sell side over here. So we've taken out buy side and sell side. Very key, buy side and sell side. So right now we have a pretty balanced market, and it's really anyone's game. So what we should be looking for is a silver bullet. The ICT silver bullet. So we're going to let it develop, and in the back of our minds, we want to be looking at the CPI buy side for the entirety of the day and making sure that this is a target that we have in mind as what NQ could be hitting. And we're on micros for this chart, by the way, just because my NQ chart is already all marked up. So we're looking for our silver bullet here. What we need for the silver bullet is liquidity run, and then we need to break a structure. So we see break a structure right here. This is our break of structure, and this is where we have our fair value gap. Bang. So fair value gap forms right there. Now we're going to keep this in mind. We want to test into it, and we've broken the structure right here, right? So this is the structure break. Bang. And we've tested into it. So we'd be entering longs here. This one we'd be entering longs, and what are we targeting? Either these relative equal highs or this buy side. And look how quick this trade is. So we test back into it, and also, I know I'm kind of speaking quickly and everything here, but our stop loss would either be below this low or this low. You have very good risk reward. So if you're entering on 50% of the fair value gap, targeting here, it's over a 1-to-1 risk reward, which I think is very, very nice in terms of the way I trade. And then bang, it takes out the buy side liquidity. So that's the first trade that I would have been taking today, or just how I would be looking at the market in the morning. And then we start to downtrend. We actually do want to keep this FEG in mind. So this FEG is going to be very useful for later in the day, I'll tell you that. And we also want to keep in mind that we formed this high in the AM right at market open. So around 19-ish. That's a buy side. And we also have this buy side up here. So you want to be marking out, you don't want to overcrowd your chart, but you want to be marking out buy sides, notable buy sides at least. And then we can see market continues downward. It bounces out of the fair value gap again. We've already hit all the buy side targets that we needed to, except for the CPI buy side. So right now there's no reason for this to really hold too much. And of course I know what's going to happen already because I traded today, but it tanks through here, and then we go into a new low day. So at this point, there's no reason to be taking a trade whether you're long or short. If you were taking a long here, you'd already be down more than 20 points or actually 30 points in a matter of a minute. So I see a lot of people doing that. As soon as it hits a new low day, they're thinking it's going to be a liquidity run and going to have a big green candle right after. Sometimes that happens, sometimes it doesn't. You can see that we went very far below, almost 40 points. You're going to get stopped out of that trade very quickly in about 2 minutes if you end up taking a long there. So for this portion of the day, I really did not see anything noticeable, so I'm just going to kind of skip through here. But this is where I took a trade on my personal account. So I was looking here for a break of structure to upside, and I was looking to take some longs. What I needed first, though, is a fair value gap to form, which we do have a fair value gap forming right here. Very tiny one at that. So that's part of confluence. If we're going to be taking a long there, we're going to be looking for this. Jesus, very tiny one. But you can see we wick into it here, and I'm just looking for some sort of consolidation and breakout. And there we have this breakout. So absolutely perfect. And we'd be targeting this buy side and this buy side. And we also have the fair value gap from the morning silver bullet, which we would be ultimately looking for as a target. And then bang. This is actually where I took another trade as a sell. Very, very tiny scalp. I'm just looking for a few candles, and I was out already right here. But hopefully this trade makes sense in terms of we're looking for a break of structure to upside, which we have here, and we also have this fair value gap, which it tested into. So the ideal trade would be to enter on this candle right here. A lot of people don't like to enter when we're breaking out due to, like some sort of fear that it's going to be a fake out. But how do we know this is not going to be a fake out? We ran for liquidity down here, right? We ran for these relative equal lows, and we break structure to upside while testing a fair value gap. And what do we have above? Is this area up here, which is our AM silver bullet. So they're going to be wanting to test that, and we know that they want to push CPI buy side. This is the ultimate target. The algorithm will make the most amount of money if it pushes to CPI buy side. That's super important to know, especially for a day like today. Whenever you have this sort of very sharp decline, or if it's an incline, if we inverse the chart and this was CPI came in lower than expected, and we happen to sharply increase at 8:30, then they want to be testing that going downside. So back to today, Wednesday, right? Also, happy Valentine's Day if you guys are doing that today, or if you have a Valentine. We just consolidate in this area really, and at this point, I don't see this this fair value gap being of much use unless we're breaking above and using it as support. But like a lot of the times, a singular fair value gap is not going to have that much use. After it gets tested once or twice, the imbalance is already being filled, and there's no real reason to have it on your chart. So we take out this minor sell side right here, which I'm just noting on the chart for you guys in red. So reds are sell sides, green are buy sides. And what I'm looking for here, if I were to go short, is a test, break a structure, some sort of fair value gap that's forming, and we continue downward. If that's not happening, I'm not taking a short whatsoever. So we do not have that. You can see we fill both of these FVGs, and what happens is we increase very sharply. So in this case, there's not a big trade that I'd be taking here. There's no trade that I actually really see. There is this order block that I guess you could take, but these are going to be very difficult trades to find if you're not looking very specifically. Like during the day, I did not see this, so it's just kind of unrealistic to be able to get that sort of fill in this sort of trade. Ideally, if you are professional, you're being able to catch all of these trades, this is where you'd be entering due to this order block, the last downward candle closure before we ultimately break out to that previous buy side. And then we hit these little buy sides here, uptrending buy sides. And then this is where we top out. And this is a very important portion of the chart that I also want to note, this fair value gap. So morning fair value gaps, by the way, this is extremely important, are very useful later in the day. So you can see here on this FVG, it's created, this is the candle that pushes us into a new high day at 10:19 in the morning, Eastern time. And we tick into it and go a little bit higher for a little bit liquidity before we push lower, sort of in the later part in the morning. So we take out equal highs already. We test again here. And this is the fair value gap that brings us there. It gets filled, of course, here. But we're testing. If you want to take a small scalp, which, again, I did take a short here, right at the wick. But if you want to take small scalps based off these, one confluence on your trade, then that's something you can do. You just should be sizing down, of course. And then you'd be targeting sell side, which would be formed here. So this would be my ultimate target on this sort of trade. So I'm waiting for the first bounce, setting stops to break even, and then my target would be anything below this low, because then it would be acting as liquidity. In this case, we actually go a lot lower to this sell side over here, and this is where this order block would have come in handy. So this thing that we're looking at over here, which was the last down closed candle before we ripped upward, was used on this wick to push us into this fair value gap. So notice it's literally just fair value gaps and order blocks that are really moving us today into liquidity zones. We're rejecting off this FEG and we're bouncing off here. And then what happens here is, again, we're bouncing. Look at the wicks. The wicks are telling a big portion of the story. And when you see this sort of aggression away from anything, whether it's a buy side, a sell side, an order block, a fair value gap, that's how you know it can be a very strong one. It can be a very strong one and still test various times. You just need to be looking at the way that the candles are sort of reacting immediately. So in this case, we have a huge 12-point candle. That's very strong. And in any case, that's very strong. So now we're looking for break of structured upside or a test to this fair value gap that we just formed again here. This could be a little trade that you can take, right? So in the back of my mind, I'm thinking we're looking to go upside. This would be your ideal entry, although there's not too much more confluence. You do have this order block, and you do have this FEG. But again, in the back of our mind, we're looking for CPI buy side to get hit. That's the ultimate target. Again, we all already know what's happening, so you guys are just gonna. Some of you may think it's a little pointless that I'm doing this, but I want to explain to you how you should be going about your day, looking at all these intricate parts, sort of ICT or SMC concepts, and of course, being an uptrend. This, what I'm about to show you, is very important as well. When you see this sort of uptrend, where it's trending very slowly, very slowly, and then sharp declines. This is a sharp decline, in my opinion. Sharp decline, new high. Sharp decline, new high. Right? So when that is starting to operate like so, you never want to be shorting this, ever. Something that happens in some cases is you see a little bit of a decline past some of these liquidity zones, but it's never going to be a huge dump like this. This is very unlikely to happen, because when you're seeing consolidation below a high like so, a high like so, and then of course this high over here from CPI, it's really just going to be expanding away from the consolidation. It's just time distortion that's happening right here. So if I'm not already in a trade, I'm looking for an ideal entry on any sort of dip here. Because you can see there's not really any good points of entries, other than the fact that you have this sort of inverse FEG here, which was previously a bearish FEG, so you'd be looking to take shorts in this area, I guess, if you're looking for shorts. We know that we're not short though, right? So we're looking for this to be tested. So here could be ideal entries. Any of these little points where we're testing back into it. Preferably this one here, in my opinion, not the first test. Because we kind of just break above and already testing immediately. I'd be waiting for higher prices and then a more sharp decline, a larger pullback to enter. So you'd be entering here and then just targeting this buy side, this top buy side, or the CPI buy side that we've already spoken about. And then hopefully all these drawings aren't confusing you guys all at once. But we just continue to uptrend, which is nice. It just requires some patience sometimes because it's very choppy, as you can see. But eventually it's going to break out a little bit quicker. So we do break out, bang, we hit this buy side. What is in the back of our mind now? Why would we short this, right? This is the question you should ask yourself. It's 3:30 in the afternoon. There's 30 minutes until close. What is the algorithm going to run to in terms of liquidity in order to make the most amount of money? It doesn't need to go to this liquidity here. This is just all buying. Whether it's institution, whether it's retail, whether it's algorithm, this is just purely buying. There's no reason or any liquidity really for this to just start dumping right here. It wants to target this buy side. It wants to target this buy side. So think about that. You don't need to enter on the tip of the breakout here. It's very scary seeing the chart go from huge push consolidation and then huge push and wanting to enter here. That is scary, so I would never be doing that. But don't be taking shorts, at least. You should be looking for buy entries. So we retest, again, the fair value gaps, guys. We retest the morning fair value gap. I know I said this one would be sort of useless, but this is exactly the use I'm talking about. We retest the morning FEG. And I just want to bring attention to this specific point right here. The top of the FEG, the top of the FEG is marked by this value right here of 24.5. Look at the test right here and what I'm about to show you. So this is our fair value gap. We test in there, and then we hit the secondary buy side, new high day, bang. What is the value? It's 84.5. Look here. I don't know, what's 84.5? Am I tripping? Oh my god, sorry. I'm tripping, sorry, 24.5. What am I saying? Right here we go, 23.75. So 3 ticks into it. Look how small of a test that can be sometimes. It doesn't need to be a huge wick. It can just be a tiny few ticks. New buy side is broken, and then now what do they have to do into the end of the day? There's 18 minutes left. CPI buy side. That's what they want to do. Bang. CPI buy side hit. In this case, again, there's no reason to short. There's no reason to take any trade. There's 5 or 10 minutes left in the market. You should be done by now in the terms of all of your trades. That's how you should be operating on a daily basis. I could do this for any sort of day in real time. I mean, I'm going to be doing it in the next few days when we do live trading on YouTube again. But this is how you should be marking up your chart. Looking at those FEGs, you don't just mark out random FEGs, right? You should never be doing that. I shouldn't just say, oh, this little FEG looks nice here. I want to mark this out. Yeah, it has a little bounce, but why the hell would I mark this out? It has no use whatsoever, right? This fair value gap here has no use whatsoever. How about this fair value gap, this humongous one? Oh, it's a big fair value gap, Chris. I should mark it out. Yeah, it rejects a little bit, but it has no use. You need to be looking at the big, most important ones in the big areas of liquidity, the big buy side up here. This sell side gets taken out. That's all they need to do to take out sell side. They took out all the sell side in the morning, this sell side here, and the relative equal lows throughout the day. And they even tested this low over here from Wednesday in the morning. So they took out all of the sell side they needed to. There's no reason to be shorting unless you're scalping like this little short, some short above relative equal highs. That's all you need to do. So I'm sorry the video got to the point where it's 16 minutes long, but hopefully all of this makes sense. If I'll just pause the screen here if you guys want to be looking at that and how do you mark out the chart. Again, all these are sort of approximated. I didn't do the exact to the tick values. Hopefully this all makes sense. I'll see you guys in the next few days for some live trading. Really hope this helped. Enjoy the rest of your afternoon, guys. Bye bye.